Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
You are listening to the financialsurvivalnetwork.com. I'm Kerry Lutz on 1230 WBZT. The R question, the R word, is the United States and therefore the rest of the world in a recession? Here to answer that question, Gordon T. Long. Gordon, welcome back to the Financial Survival Network.
Good morning, Kerry. Always great to talk to you. Enjoy our discussions.
Hey, so yes or no? Recession?
We never left it, did we? I think that
I didn't think we did.
Exactly, but it's all in how you count the beans. And in real terms, if you look at it properly, we've never really left being in a recession. I would argue, Kerry, and I don't mean to be too negative, I believe we're in a stealth depression in the United States. But it's around the world, growth is slowing at such a rate, and the corporations their EBITDAs and free cash flows are bleeding off. Nobody can find real organic growth to the degree that they need, and so it's look at Europe. It's been in 7 quarters of a recession. This is after the 2008. So 7 quarters, and that's 25% of the global GDP. That's got to have an impact. Well, it has. It's washed ashore in Asia. So Asia's 50% of the global GDP. Japan has destabilized the region with its Abenomics, and so the currencies have created problems. And in China, not having the same export is not driving the imports from all these Asian tigers. So you're now seeing it collapsing in Taiwan, South Korea. This week you see in India and Indonesia here even this morning. So it's slowing, and of course China's trying to intentionally slow the economy as it tries to get its hands around this shadow banking and credit problem early in this new 10-year tenure of the new government, so they can do some of the purging initially. So you've got them intentionally slowing. They're 75% of the world, and the only person that's standing tall here is the United States. And I look around, and I was mentioning earlier, I just did a workshop with Lance Roberts and Charles Hugh Smith, and we went through well over 50 slides, and there's just no question in the United States, even on using government statistics, if we're not there, we soon will be, and we'll be talking recession within 60 days here in the United States.
Well, I knew we were in a recession for 2 reasons here, Gordon. Let me tell you what they are. Number one, you know that the inflation statistics are bull, and once you get even take half of John Williams' shadow stats number and you deduct that from the growth number, you're in negative GDP territory right there. And the other way you'll laugh at this is the toilet paper index. They keep cheating on the damn roll of toilet paper, and that's not the sign of a healthy economy that has to cheat on the number of sheets of toilet paper in a roll. Okay? That's not the sign of a healthy company that needs to cheat. And if they're cheating on the toilet paper, they're cheating on every other indicator, every other brand. They're cheating on the cornflakes. They're cheating on every other thing that you're buying in the supermarket. Every brand. I was having this discussion, I don't remember. Oh, it was with John Rubino over at Dollar Collapse, that the brands that you respect, they're all cheating on the size of the portion that you're buying in the box. They're all cutting back, which means the inflation is there and it's just not being recognized by your government bean counter, which means that it's a lot worse than they're talking about, which means the recession is here.
That's exactly right. You and I talked briefly about that last time, but John Rubino and I did a whole video on exactly that, going through all of the items in the stores, down to how they're falsifying the bottoms of the bottles, and so that you can put your finger up in the inside of a bottle. It's incredible. It's bad customer policy. A capitalist system is based on delivering more for less.
Trust.
And that's the productivity. And it's based on, and trust comes with it, a customer relationship. But what happens is when you start to want to give less for more, and you're consuming more than you produce, then things creep in, and eventually there's a crisis of trust, which we do have, absolutely. But it's broken down. The core issue to me, and it reflects in your comment on what you're seeing in the stores, is the primary issue that's running through the economy today is that most Americans lack a sufficient wage that's capable of boosting spending and getting the economy operating at a desirable pace. Real consumer spending is clinging to the a critical 2% pace over the last 12 months. A sub 2% pace is typically associated with a recession. And back to your deflator comment, Kerry, because it's right smack on. I don't even look at that garbage anymore. I just look at the nominal values that they're looking up, and even those are not trustworthy. But the nominals would suggest that this is the entry into a recession. They just can't get it up for all the points that I was talking about. So. And then corporate, how you get growth is you got to create jobs, and when jobs are starting to be created, then you get confidence, and when you have confidence, you get more consumption. And remember, we're a 70% consumption economy, so if confidence is lacking, you've got a problem. And with consumption, you get growth. Now, what kicks it off is corporations deciding there's an opportunity, and therefore there's capital expenditures and investment. That's what starts the process. But it usually starts because pricing is correct. You don't have malinvestment, you don't have mispricing, because they get corrected in the economic cycle, which hasn't been allowed to happen this time because we're papering it over. We're afraid of that R word. We're also afraid of the B word, which for bankruptcies, where we actually do this cleansing mechanism. So if you look at the investments in the corporations, and I spend a lot of time down at the fundamentals and the earnings levels, and it's just blatantly obvious, but nobody's paying any attention to it because everybody's betting on the Fed and don't fight the Fed, which is priced in, by the way, and something will happen. But the corporations are over leveraged in regards to too much is in buybacks and dividends. That's where their capital is going. And if you're not investing in the top line, which that means you're not, it's only a matter of time. And that's why the recession is almost built in now. Look at Walmart's earnings here last week. As you used to say, as goes America, General Motors goes
Sure.
America. Well, today it's Walmart, which tells you their earnings now, they're going down to zero. There's no growth. Their earnings are there, but there's no growth in their earnings, which tells you that our middle class has been completely gutted or is being gutted. Medium household income has been falling off, which goes back to my point about a sufficient wage, and the cycle's not there, and we're not kickstarting it. So I think we're very close or already in a recession, and we will start talking about it later this fall. It'll be all of the words, but that doesn't necessarily mean that the market's going to crash, Kerry.
Yeah, well, we talked about that too, because while the economy's sick, it's not quite as sick as the rest of the world. Exactly.
And the rest of the world is fearful, and they're looking for homes for their money. And as you've mentioned, the money's going to flow somewhere. And right now, we're the what was your expression? We're the best horse in the glue factory.
Yeah, the best looking horse in the glue factory, or the valedictorian of summer school, as Peter Schiff likes to say.
So that money's got to go. It's going somewhere, because you can clearly see it. It's coming out of Asia, because the currencies are falling. And remember, when we had currency wars here, that was what they were trying to do. They're desperately trying to drive down their currencies so that, in fact, they could increase their exports. Well, now you should be having their currencies are plummeting. Now the problem is they got no exports because nobody's buying. Now the falling currencies killing them because they got inflation. They got to import food. So, there's this balance. And I've a chart that I use frequently that shows in the world where we got too much credit expansion, and then we got too much credit expansion and contraction, and you can really see it in the global map where it's red, where we got too much expansion. It's all in the Asian countries, and that suddenly changed because it's just too hot, too much growth, too much malinvestment, too much in the shadow banking, and then you got the deleveraging. Which isn't in the consumer. It's in non-performing loans, in these, mortgage-backed securities, asset-backed securities. Issues that we still have are still latent in the Western developed countries, where they're still trying to take those off the books. So you got both ends of these spectrums, and they're both bad. both ends are bad, and there needs to be a purging. But the politicians are not going to allow that to happen, and the only game in town is monetary policy. So, my sense, Kerry, is as this recession looms, and it's looming, it's going to actually be and we'll see taper. Taper's got to be brought in because we have some serious problems in something called collateral transformations based on something else called rehypothecation, which, by the way, in the new crisis will be the key words. But these issues themselves will be the screen that will allow the federal banks or the Federal Reserve, the central banks globally, to really fire the next round. And there is another round of significant, there has to be because of the amount of deleveraging globally of money printing, and it'll allow them to have that to happen. And I believe that money will flow eventually from the various around the world back into America. And that'll find its way back into the markets despite bad earnings, okay, despite slowing revenues. And as bad as that all sounds, when you've got as dysfunctional markets as we currently have, and trust me, they are dysfunctional.
Oh, yeah.
Weird behavior happens. And it's tough to make a market with this kind of behavior because it defies, the Fed Reserve, the Fed model is broken. Even they admit it's broken. So everything starts to break down. A little long-winded, Kerry, but it all makes sense.
Well, we're looking
if you really look at it globally.
We're looking at today. The Dow broke below 15,000. Today is August 21st of 2000. Dow broke below 15,000 for the first time in a while. We're looking at the 10-year. Gordon has hit 2.851 as we're speaking. Gold is holding pretty steady in that high 1300s range. Oil is at 105. The euro is holding at that 133 range, but I think that's kind of just a temporary kind of high for there. I think it's due for some problems right in the early fall once everybody gets back from vacation. What's your take here on these interest rates, Gordon? And actually, we're going to talk about that right after this break on Financial Survival Network. I'm Kerry Lutz here with Gordon T. Long, 1230 WBZT.
Hi, it's Kerry Lutz. I recently decided to move my retirement account into physical precious metals to hedge against the coming times. If you want to move an existing retirement account into physical precious metals that you can hold in your hand, tax-free, there's no company that can do it more quickly and efficiently than Regal Assets. It took them just 24 hours to open my new IRA account, and all I had to do was fill out one simple form. The best part is that Regal Assets does all the work for you. They cover the setup and administrative costs for 2013. If you're interested in making the same move I did, call 855-678-6620, 855-678-6620. That's 855-678-6620, or visit them at regalassets.com. You'll be glad you did, and tell them Kerry sent you.
We're back with Gordon Long on the Financial Survival Network on 1230 BZT. So, Gordon, these interest rates have snuck up really quick. The 10-year, 2.85. What are you seeing on that?
Yeah, it's shot up, and it's destabilizing the global markets right now. I mentioned earlier about Japan and Abenomics, and it's all even spilling over from there. We're at about what I think was going to be overhead support, or overhead resistance rather, but I do think there's a chance they're going to push them up a little bit higher here on these rates. And remember, when rates go up, Kerry, that means the price of the bonds are going down. And when the price of bonds go down, and you have them as leveraged as we do around the world with rehypothecation, and you also have the amount of collateral transformations, a game the banks are doing with private repos right now, you have what everybody knows as a margin call. So the dropping bonds are forcing collateral calls or more collateral to be brought in. The problem is there's no high quality collateral out there because the United States Federal Reserve is buying it all. It's putting it on their books. That's what's forcing taper. They've got to get more higher quality, if we can call U.S. Treasury higher quality, but it's higher quality paper out there. Otherwise, the credit market is just going to seize up. So the Fed is caught betwixt in between here with these interest rates pushing up. So they've got to drive them down. And they've also got to drive them down because the United States interest rates now, right now, the average duration is about 5.2 years on the U.S. debt, with an average payout right now of about 1.88. So they can't afford to. Remember, the Fed's job is really to finance the U.S. debt. That's the job as the intermediary in here. Mm-hmm. So they can't allow them to go any higher. They've got to get them down. It's my personal opinion, Kerry. I believe we haven't seen the lows in yield yet on the bond market. I still believe eventually we'll see the 10-year much, much lower than it originally was at 1.75, 1.6. And they will force it down as part of financial repression. And that'll be part of this next, of what I see to be happening during the next year as part of the next wave of financial repression. But they need a smokescreen to do this. So they're putting the fear in the world, and they're bordering on losing control. Because once you get this contagion going with this collateral calls, which we're on the border of it now, because there's something else, Kerry, called VAR, value at risk, which all the banks have to do for Tier 1, Tier 2. So as soon as you get this volatility, suddenly the value at risk also adjusts, which means there's more margin calls that got to go in, and then you start affecting the $700 trillion swaps marketplace. So
wow.
There's this balance, but at the same time, they want the rates up. They really do, because the pension plans are going to go under unless those rates go up, because they can't make the payouts. They've also got to have them up high enough just to keep the money coming in to flow to finance the United States debt. So they're in a quandary here, and I believe that they're playing a little game of chicken. They're trying to scare the market, but they're losing control of it. And I'm talking about the 600-pound gorilla debt market. But at the same time, are ready to fire another bazooka to pull it off, because everybody will be screaming for them to do something.
Yeah,
and
do anything.
So it's about real rates, really, what's going on. It's the real rates, not the nominal rates. That be really careful when you're looking at that 10-year and saying it's 2.85, but what's the real rate? And so
I don't know here. It
exactly.
just seems like they're playing Russian roulette with a semi-automatic weapon here, instead of a revolver.
A lot of innocent people are going to get shot as the bullets spew.
Dangerous, very dangerous.
Picture, but we've left them with no choice. I'm not a supporter of the Federal Reserve or the central banks, but even in the last Humphrey Hawkins, I guess Schumer said, you're the only game in town. He's quite right, because it's all monetary policy. There's no fiscal policy that's stepping up to it. And by the way, we got issues coming in September, big time on that. And and the public policy is failing us miserably without going through the details of the continuous miscues that we're doing. And so they're going to leave it to monetary policy, and it's ran out of monetary, and it's frankly almost running out of runway without these new shifts that I think are going to come, which is going to put us on a road that's almost totally irreversible, I'm afraid. And that's what's the most frightening to me.
Yeah, well, when you they really are going through uncharted waters here, and you say.
But this is when you make the best money.
Yeah, valid point.
This when there's fear in the air. Rothschild's always said, you buy when there's fear in the air.
Yeah,
and there's no question there's fear.
There's lots of that now.
And the bond market has reflected it. It's basically been a fear trade since 2008. People were willing to buy bonds because they said, it's not my return on capital, it's the return of capital.
Yeah.
And they went in, but financial repression says, yeah, okay, we got you, but now we're going to debase the currency and make it worth nothing. So you got, pensioners that thought they were going to retire, and I can remember a few years ago, they said, well, you should, you can maybe get 8%, you might even get 10 if you're really good, but you should budget conservatively for 6% per year return and plan. Now, who's getting 6% return right now on their investments? And the answer for most people,
far between, yeah.
Exactly, without inordinate risk. It's there, but there's risks that go with it. It's significant. Yeah. So the pensioners, let's say a pensioner had $500,000 set aside. 6% said they were going to get a nice $30,000 a year. Mm-hmm. And they probably said, with everything else paid off, I can live comfortably on that. Now they're getting nothing. Where are they getting? So they plan. Where are they getting the $30,000 now in this little analysis to live on in their trailer down in Florida? Well,
no, they aren't.
It's not. They're not. So what do they do? At 72 years old, where do you find work? Well, look around McDonald's, look around fast foods, and they're trying to get by. This is this gutting of America. This is the robbery that's frankly going on.
Mm-hmm. And they don't even know it's happening.
And they don't. It's a travesty.
They really don't.
I mean, it's unfortunately, and nobody's talking about it. It's like they're not their problem. They shrug their shoulders. But as we both know, inflation is nothing more than a tax. It's a stealth tax.
Yeah.
To pay for the government, and that's what's happening here.
It really is. Well, Gordon, we need to conclude now. So if you've got money right now, if they haven't taken it all yet, what do you do with it?
Kerry, it's a great question and a long-winded answer, but the simple thing is you don't store it anymore. You need to be invested in something that's going to give you a free, discounted cash flow. And whatever you can find that you know in a tough time is going to give you that sustained cash flow. You can store money, and your way to store it is in gold and silver. And I'm a big proponent of that and other hard assets as a store of value. You typically don't make money on that. All you do as you come out is protecting yourself with insurance. Those are areas you need to be in. You need to be looking at. But the government's going to take some action there, so you need to be balanced and careful. But it's trying to find, and I see that, Kerry, a rush around the world. People are looking for something that has a sustainable cash flow. Because when you look at the books, they may be making profits and earnings, but if you really look at the discounted EBITDAs, it's not there.
Right.
And that's the problem. And so that's where and everybody's looking for it.
Everybody's out there.
And it's out there, but it's typically not in where you traditionally find it.
Yeah, just as an aside, every public pension fund in America has 8% as their programmed yield, expected yield, or projected yield, and they're not getting anywhere near that. And
not even close.
Yeah.
So what you've got is $3 trillion of unfunded government, state, local pensions right now. Wait for that crisis to happen. You've got $500 billion in corporate pensions, as just exactly that are unfunded. And then we have the audacity to turn around here and adjust the GDP back 3 years to now credit into the GDP unfunded liabilities of pensions as GDP, which pushed our GDP growth up by 3%.
Yeah.
So when we say we're not in a recession, let's just cease and desist on this discussion on GDP calculations. This is the garbage that we're passing off to people who've worked hard all their life to put assets aside, to do the right thing, and finding it really robbed from them right now.
Yeah, it's criminal. It's a shame, and
But that's why they need things like yourself, the Financial Survival Network. Of new and different ways to look at protecting. Not trying to give you a plug, Kerry, but it's true to look at these areas.
Yeah.
Because it's more critical than ever before. And now it's becoming, we were talking about this many years ago, but now it's become so blatant. How can you not see it?
Yeah, you're absolutely right. On that note, we got to take off. But Gordon, to find you, to find your work and other things, you got a number of sites. What's the main one to go to? GordonTLong.com. And from there, you can go up to our YouTube channel and our other trading sites. But I welcome everybody. We do a lot of work, roundtables and discussions with some of the best minds in the world in geopolitics and macroeconomics. And if you're into that, we're the site to come to. All right, Gordon, and financialsurvivalnetwork.com. Sign up, and we'll be talking with you again real soon. Thanks so much.
All the best, Kerry. Thank you very much.
Our friend Tom Dyson at the Palm Beach Letter is giving away free copies of a really cool report he put together called How to Protect Yourself from America's New Secret Police. Inside, you'll learn all sorts of simple, everyday tricks you can use to make yourself a little less visible and vulnerable to scammers, hackers, and even the federal government. For instance, Inside Tom's report, you'll learn which free internet email service never to use. This company doesn't care if your account gets hacked or not. 4 things the government must tell you if they request your social security number. And how to spot skimmers lying in wait on ATMs and gas pumps, and much, much more. These tricks and secrets are low-hanging fruit ideas. You don't have to invest time or much money into them. Most are free. But by taking some basic measures, you can make your privacy much harder to invade than your neighbors. Tom's report is available for a limited time to listeners who take a trial subscription to his newsletter. Just visit the Financial Survival Network homepage for more information, or go to www.palmbeachletter2.com. That's www.palmbeachletter2.com.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.